Yes, we can start now. It's 5:45 and we are live on Facebook.
Okay, thank you, Sama. So, ladies and gentlemen, namaskar. I am Dr. Prabin Khadka on behalf of the organizing committee for the IIDS webinar series on politics, economy, and public policy. We warmly welcome you all to episode 19. Before we start today, I just want to take this opportunity to thank all the other members of this organizing committee for the webinar series. I have, Sudmaya Dahal, Sudamnya Dahal also with me, and I also have Sama Rana and Devika Thapa. So we are extremely grateful for all the members of the organizing committee. The title of the talk today is Effect of Remittances on Financial Development, Investment and Growth in Nepal. The presenter today, we have Mr. Manbar Khadka. Mr. Khadka is an economist at the Asian Development Bank here at the Nepal Resident Mission. He received his master's in science in agriculture and resource economics from the University of Maryland at College Park, USA. And he received his bachelor's in economics from Wabash College in Indiana, USA. Prior to joining ADB, Mr. Khadka worked for the Consumer Unity and Trust Society International, which is based in Jaipur, India, and also with our own IIDS and EC Mode, both based in Kathmandu, Nepal. So thank you, Mr. Manbar Khadka, for willing to present your paper today. We have Dr. Niraj Koirala as our discussant today. Dr. Koirala received a PhD in economics from the Texas Tech University. Dr. Koirala specializes in monetary economics, time series econometrics, and international economics. He's going to start working with the California State University in Los Angeles as an assistant professor in international economics. Previously, he also worked at Gettysburg College as a visiting assistant professor. He has also worked with the IMF and the University of Texas A&M Investment Management Company as an economics researcher. Dr. Koirala is currently writing a book on monetary policy in the context of Nepal. For those with similar research interests present here today, please reach out to Dr. Koirala. Today's paper on the effects of remittance is quite relevant, ladies and gentlemen, especially given that several reasons for the current economic crisis in our country can be attributed to remittance. Some house rules before we begin. Please mute your microphones when not speaking. During our Q&A, please raise your hand if you want to speak, or you can type your questions in the chat box. If possible, but this is not a rule, turn your video on when asking questions. And please do not interrupt other people or attempt to speak over them. So over to you, Mr. Manbar Khadka. Thank you very much.
Thank you, Dr. Khadka, for this nice presentation, and thanks to the IIDS team for giving this platform to present our ongoing research on remittance, financial development, investment, and economic growth in Nepal. Well, this is not a published paper. It's work in progress. So it's a good platform to share the research, the findings of this paper. So let me upload my presentation. Okay. So first of all, the background. So, well, the title is about the relationship between remittances, financial development, investment, and economic growth in Nepal. Just a little bit of background on workers' remittances in Nepal. Workers' remittances are critical for developing economies as they have broader macroeconomic implications. These are not only an important source of household welfare, but also a major source of foreign earnings at the national level. So at the household level, remittances have contributed toward human capital formation through increased access to education, health, and entrepreneurship development. And at the national level, they have provided a cushion against imports and helped in maintaining external sector stability. Remittances play a significant role in foreign exchange earnings, improving a country's creditworthiness for external borrowing, expanding innovative financial mechanisms, and enhancing access to capital. So if we look at the recent trend of remittances, particularly in developing countries, they have grown as one of the largest sources of financial flows, often overshadowing other sources such as official aid and private capital flows. So in many South Asian countries, they depend on remittances to partly finance their imports. For instance, India, Bangladesh, and Nepal in the region receive a significant share of personal remittances every year. In Nepal, remittances have become one of the major sources of foreign exchange earnings. Over the last 5 years, remittances have contributed about 2/3 in gross foreign exchange earnings. Now, if we look at the trend of remittance inflows in Nepal, it's interesting to note that remittances have grown after the country adopted a liberal policy for out-migration in the 1990s. Remittances in Nepal have increased at an average annual rate of 17.2%. And as per the latest statistics, around 1/5 of the total population is outside, and on an average, 700 people leave country per day for foreign employment. So this is the data as per the last 5 years. And in absolute amount, Nepal receives about $8 billion US dollar remittances every fiscal year. And Nepal was also among the top 25 remittance recipient countries and was the 4th in the world in 2019 in terms of remittance as a share of GDP. So here we have some slides depicting the pattern of remittance inflows in Nepal and other South Asian countries. So the first chart shows remittance as a share of GDP, the growth. Well, the growth has been moderating over the lately over the years due to sluggish inflow of remittances, as we have been observing very recently as well. And so it shows that remittance to GDP stands about 1/4 of GDP, like in terms of relative size, it's about 1/4. And then the below chart shows, compares the remittance to GDP across South Asian countries. And the last chart shows the significant amount of significant share of remittances in Nepal's foreign exchange earnings. So with this background, we delve into a research question, which is, what is the effect of remittance and economic growth, financial sector development, and investment in Nepal? Now, it's long argued that remittances have not been effectively channelized toward productive use and investment. Much of the remittance income is used for private consumption. So we would like to entangle whether there exists any relationship between investment and remittance in Nepal. Second, with the adoption of liberalization policy, banking and financial sector has visibly grown and been gradually strengthening. As I said earlier, the period of financial sector development also coincides with the gradual increase in workers' remittances. So what does the data say on the association between remittances and financial sector development in Nepal? And finally, we would like to see the relationship between remittances and economic growth in Nepal. We did lots of literatures that we reviewed, they have investigated macroeconomic impact of remittance, and they have found mixed results. And most of the studies in remittances are conducted using panel dataset of various regions of the world and employed OLS and GMM approaches for estimation. So in this slide, we have some figures basically depicting the kind of pattern among the macroeconomic variables that we have investigated in this study. So it's just showing the trend, the association between remittance and per capita GDP, which is positive. The trend is positive, moving in the same direction. Similar positive trend can be seen for other macroeconomic variables that we have investigated here. for instance, gross fixed capital formation, which is a proxy of investment, and remittances, and also remittances and deposit mobilization by banks and financial sector, and credit lent by the banks and financial sectors to private sector, and remittances. So in Nepal, majority of studies that have investigated, that have looked into the effect of remittances, it's basically focused on socioeconomic implications of remittances using micro-level data. From macroeconomic perspective, there has been very few empirical studies that measured the effect of remittances and growth. The one paper by Thagunna and Acharya and Uprethi, they examined the impact of remittances and macroeconomic variables and find positive and significant effect on consumption, but no effect on investment. There's another paper by Bhatta in 2013 using vector error correction model. The paper finds a positive relationship between remittance and trade deficit. And from growth perspective, there's a paper by Tahal, which was published in 2014. It's more of a descriptive paper. It shows a positive correlation of remittances with financial development and human capital accumulation. So essentially, our paper attempts to fill the gap in the literature by investigating the effect of remittances and investment, financial sector development, and economic growth using ARDL bounds testing approach. So here in this slide, we have a conceptual framework. The first one talks about the remittances and growth channel. So it says, that remittance inflows will lead to additional resources available for households, consumption, and expenditures that will lead to improvement in physical and human capital accumulation, which will eventually enhance the productive capacity of the economy. The second conceptual framework is about the remittances and financial development channel. So it says that remittances would enhance the availability of quantity of fund in the domestic market, thereby easing liquidity constraints, ultimately contributing on deposits and credit flows. And the third conceptual framework is about the remittances and investment channel, where it says that remittances will lead to availability of additional resources, thereby positively influencing domestic capital accumulation. And this happens especially in countries that lack abundant resources for investment. Now, this conceptual framework is based on the literature review that we have gone through in the process of writing this paper. So based on that conceptual framework, we have this methodology and data. So it's the functional form for the remittance and growth model. The dependent variable is real per capita GDP. It's a time series analysis as a function of education, secondary school enrollment, gross fixed capital formation. Gross fixed capital formation indicates accumulation of productive assets by private as well as public sector and used as a proxy of investment. We have fiscal balance as a proxy of government expenditures, remittance and precipitation. Precipitation as a proxy of rainfall, as good monsoon leads to good economic growth in Nepal, so we use that variable. The second functional form is deals with the remittances and financial model. Now, financial development can be represented via financial development indicators, such as the amount of deposit mobilized by banks and financial institutions, or credit lent by the financial institutions to the private sector. So, and it's measured as a function of per capita GDP, savings deposit rate, and remittances. And the third functional form is about the remittances and investment model, where the dependent variable is gross fixed capital formation, which is a proxy of investment, as said earlier, and it's modeled as a function of per capita GDP, real interest rate, remittances, and fiscal deficit. So the idea is to look at the relationship between remittances and fixed capital formation in this model. So this is the general data description of the variables that have been used in this paper. And here we have the graphical presentation of data series. The horizontal axis represents time, and the vertical axis, it shows the amount. For instance, for the credit, the amount of credit dispersed by banks and financial institutions in a year. So now coming to methodology part. So for the case of remittance and growth model, the data period is from 1981 to 2020, and the data source is World Development Indicators. And of course, the data from the Ministry of Finance and Nepal Rashtra Bank. And for the remittance financial development model, the data series is from 1975 to 2020, and the data source is from Central Bank and so forth. So for our analysis, it's a time series analysis. So first of all, time series properties of variables need to be examined. So they have been examined using augmented Dickey-Fuller tests. And the stationary test showed that the variables are a mix of order 1 and order 0. And so, based on economic literature, the ARDL approach to co-integration is used because the literature says that this approach is best when we have a mix of underlying regressors of I0 and I1. And also this method of identifying the long and short run analysis would be good given the small sample size. So ARDL bound testing approach is used for our economic analysis. And here we present the RDL equations. So I don't want to get into the detail of these equations. And then here we have the results of the empirical analysis. So first here, we talk about the remittances and growth model. So this table presents the long run coefficients of the estimated model. So all explanatory variables in the growth equation have expected signs, and these are statistically significant except fixed capital formation. So basically, we want to look at the coefficient estimate of ln rem. Well, it says that a 1% increase in a 1% increase in remittance would increase the real per capita GDP by 0.024%. And the result is statistically significant at 5% level. And these are the results of error correction model. The coefficient of the error correction is negative and significant, confirming the presence of long-run relationship among the variables. Similarly, here we present the results of those two models, the remittances financial model and the deposit and credit the remittances and financial model. So again, when we look at this deposit and credit equation, we see that the long-run coefficients of the estimate, all explanatory variables have expected signs, and these are significant in the deposit equation. The coefficient of remittance indicates that growth in remittances significantly contributes to deposit mobilization. A 1% increase in remittance results in an increase in deposit mobilization by 0.17%. But in case of credit equation, all the variables have expected signs, but remittances and saving rates are not statistically significant. And then we have the error correction model equations. And the error correction model equations, negative sign shows long-run convergence. These are statistically significant. And finally, we have the results of remittances and investment model. All explanatory variables have expected signs, and these are significant except for remittance. the coefficient of remittance indicates that remittance has a positive association with investment, but it is not statistically significant. So with these results, we come to our conclusion and policy recommendations. So the results show that there exists long-run equilibrium relationship among variables. Remittances positively influences economic growth. A long-run positive and significant relationship between deposit and remittance indicates a strong influence of remittance and financial sector development in Nepal, but it does not find any significant relationship between remittances and investment in the long run. So in case of Nepal, remittances have been stimulating private consumption that amounts to slightly above 80% of GDP. Remittances have financed Nepal's imports considerably, but increased expenditures on consumer goods will further deepen Nepal's import dependency. With such an increase in consumption as well as imports, this has essentially prompted economic growth. But the essence is this: Nepal needs to gradually shift from the current consumption-led growth to an investment-led growth economy. And remittance inflows account for a significant share of foreign exchange earnings. This important source of income needs to be channelized toward investment and productive use. Now, there are some good examples from other countries. For example, Bangladesh offers different savings and investment schemes, such as non-resident foreign currency deposit, wage earners development bond, and non-resident investors Khadka account. Similarly, India has focused on establishing a strong institutional framework through initiatives such as Pravasi Bharatiya Divas, Overseas Indian Facilitation Center, and so forth, to engage migrant workers in the development process through investment. In the case of Philippines, commercial banks offer migrants specialized investment products and services, such as insurance, pensions, and real estate, with direct payment schemes to aid beneficiaries. In 2011, the Central Bank of Philippines released overseas Filipino bonds that allowed migrant Filipinos to invest in bonds for as low as $100. The central bank has also supported microfinance institutions to help channel remittances sent to rural households to invest in MSMEs. In case of Nepal, about 24% of remittance is diverted toward household consumption, and just less than 2% is diverted toward productive activities. Now, the central bank, on behalf of the government, has been issuing foreign employment savings bond every fiscal year. This was initiated since fiscal year 2010. The aim is to allow migrant workers to invest in this financial instrument to channel the fund in nation-building activities. But despite offering a stable interest rate of 10%, well, it has increased lately per annum, its subscription has been very low every fiscal year. So the low level of subscription is largely due to a lack of awareness of advantages of investing in such secured financial instruments among the migrant workers. The second issue could be that finance companies and cooperatives offer higher interest rates for a certain period than the returns on these.
Excuse me, whoever that is. Yes, I don't know who that is. Devika, can you mute that person, please? I'm sorry about this.
Yes. So the second issue could be that the finance companies and cooperatives offer higher interest rates for a certain period, less than a year, than the returns offered on these bonds. And third, it could be that migrant workers' immediate priorities are huge and so are reluctant to park their savings on such bonds for a longer period. In any case, the government and concerned agencies should prioritize such and other means through which remittance income could be channelized in the productive sector. This low level of awareness should be addressed through information sharing and benefits of investment in such financial instruments. For instance, in Philippines, banks and financial institutions are required to post remittance charges on their websites. So this allows migrant workers to make informed decisions on channeling remittances. The foreign employment saving bonds in Nepal can possibly be targeted among high-income earners abroad. The government should also come with specific project shares and bonds for remittance recipient households to mobilize remittance for investment. A recent initiative is the Remit Hydro Limited that can be expanded to other investment projects. And at the household level, remittances could be diverted toward productive uses by upskilling, providing entrepreneurial skills to household members to initiate their own enterprises. And finally, a positive long-run relationship between remittance and deposit mobilization is evident of remittance being an impetus to financial sector development in Nepal. Banks and financial institutions have gradually flourished with the adoption of liberalization policy since 1990s. This period also coincides with a gradual increase in outmigration for foreign employment. So we all have experienced that during sluggish remittance inflows, banks and financial institutions in Nepal face liquidity constraints. So it signifies an increased importance of deposit mobilization that has come through remittance, but more concrete policy level actions are needed to further promote remittance inflows through formal channels. The policymakers should promote ways of reducing remittance transfer costs and provide further incentives for channeling remittance into productive activities. Cutting transaction costs through digitalization of remittance business would also encourage formal means of remittance. So there has been some recent policy measures, particularly with the monetary policy and the recently announced fiscal policy that is aimed at enhancing the formal means of remittance. For instance, the recently announced budget statement says that if migrant workers remit their money through formal channels, they will get some incentives when they apply for renewal of their labor permits. So there has been some initiatives. So more initiatives are needed, and that could be reflected in the fiscal policy and the monetary policy to attract the formal means of remittance, or attracting remittances through formal channels. So with this, I end my presentation here. Thank you.
There are a couple of questions for the presenter from Professor Alok. So he asks whether you have calculated the dynamic multiplier effects. He is essentially looking for impulse response or something, whether you are targeting to go towards that direction or not.
Okay, so that's a very important question from Professor Bora. So as I said earlier in my presentation, so it's a joint paper with one of the assistant professors at Tribhuvan University. So this is work in progress. So this dynamic multiplier effect that needs to be looked into. So when we review this paper, we'll definitely look into that aspect. Thank you.
Okay. Thank
Dr.
you.
Koirala, would you want to first give your comments? Because we're aware you've got,
Okay.
a very
So
short
just give
presentation.
me...
Why don't we start with your comments first? Yes.
Okay. Just
Over to you, Dr. Koirala. Thank you, Mr. Manbar Khadka.
Just give me a second. I don't know whether it is. Just give me a second.
Would you want me to share my screen? I can actually do that.
No, I do have my own screen here. I have. Okay. I think you need to change the settings so that I can share my screen.
Yes, thank you, Dr. Koirala. Mr. Khadka, could you stop sharing your screen? Yeah, over to you.
Okay. Okay.
Okay, excellent. Please go ahead.
So the author in this, again, the author has said that this is just a working paper. So although my discussion, my feedback, they are just a suggestion, and I will ask a couple of questions based on that. So let me summarize first what the authors do. The authors study the economic impacts of remittance using 3 different channels in the case of Nepal. The first channel is growth channel, and for studying that, they use the data from 1981 to 2020. Another channel is financial development. For that, they use the data from 1975 to 2020. And last channel they study is investment channel. For that, they use the data from 1975 to 2020. And the authors use ARDL and error correction model to explain macroeconomic impacts of remittance in Nepal. The topic is itself redundant in the sense that there are a lot of literature in Nepal in context of remittance. And the main result the author find are the remittance is positively associated with economic growth. There exists long-run association between financial development and remittance. However, remittance does not appear to affect investments significantly in the long run. These 3 are the main findings of the paper as of now. So I do have a couple of questions to author. The first question is, why do you use ARDL model? And another question is, what are the criteria for variable selection? So in the first, in the case of growth channel, you have used precipitation and other things. What are the criteria you use those variables? I'm not convinced. And if you use precipitation, why not temperature? Probably you want to explain the impact of weather variable. If you use that, then temperature should be there. And in the case of, I think in the case of growth and financial development, intercepts are negative. How do you interpret the results in that situation? And I'm also confused whether the variables like remittance, per capita GDP, credit, deposit, and fiscal deficit are real or nominal. Because if they are nominal, then we might need to interpret differently. And if they are real, then probably we might get different results. So these are my questions. So after that, I will provide you feedback. I don't know how this works, but yeah, these are my questions as of now.
Yeah, thank you, Dr. Koirala. Manbar, would you want to answer some of Dr. Koirala's questions?
Thank you, Dr. Koirala, for your feedback, for your questions. I mean, this is exactly what we are looking when we are presenting our work in progress. So I guess I also explained very briefly during the start of my presentation that the reason for using these ARDL models, because the literature review, it clearly says that the ARDL co-integration approach has various advantages in comparison with other co-integration methods. It can be applied irrespective of whether underlying regresses are purely I0 or I1. And in our case, the variables are a mix of order 1 and order 0 process. And so the ARDL approach to co-integration is used. And also some of the literature says that when you have a small sample sizes, ARDL approach is the best. Now for VCM, the regressors should be integrated of the same order. Now, in terms of the selection for macroeconomic variables, now for this, we did go through a lot of literature review, particularly the paper published in the international journals. And the kind of macroeconomic variables that they have used for this analysis was also followed. Now, there is a limitation, like in case of Nepal, we don't have all the kind of data, all the kind of macroeconomic variables that we would like to employ or estimate for the regression analysis or whatever purpose. So there is a constraint. So we had to, so based on that constraint also, we chose the limited variables that we were able to work on at the moment. Now, in terms of growth channel, we included precipitation as an independent variable. Well, precipitation as an independent variable. Well, so this variable was included in the model because I guess I briefly explained earlier in my presentation also that good precipitation would lead to bumper harvest, good agricultural harvest in Nepal, and that would have a positive impact on the growth. So precipitation could be explained as one of the explanatory variables in the growth channel. So why not temperature? That's a very good question. So in the climate change literature, temperature is one of the important determinant to assess the effect of climate change on crop productivity and so forth. So that could be looked into. And to your last question, are variables like remittances per capita GDP, and fiscal deficit. Now these are real ones. Yes. So why are intercepts negative? So we have not really thought about that. So let me think about that question and come back later. Let's say put a footnote in our revision. Thank you.
Thank you. So can I provide some feedback from my side?
Yes, absolutely, Dr. Koirala. Go ahead with your feedbacks,
Okay.
please.
Thank you. Thank you for your answer. I have written some suggestion. If since it is just a working paper, you might want to consider this. Again, this is just a suggestion. In case of Nepal, remittance is considered as the primary driver of consumption. So I think it is better to quantify the welfare impacts of remittance together with these investment, financial development as well. And what this paper lacks is that although we will be doing empirical thing might give us short-run relationship between these variables, but I think studying the role of remittance in structural model might be a better idea. In that setting, you can design two types of household. One household receives remittance and another might not receive remittance. And then you can see how productivity of remittance receiving household changes and how the productivity change due to remittance might impact overall economy. And I think, if I was doing this research, probably I would prefer to study the topic in panel setting to understand where does Nepal stand among the remittance receiving country. For instance, we have the case of China, India, in the case of, I think, 50s or 60s, we have South Korea. They are good, successful example of remittance utilization. Nowadays, we have Tajikistan, we have Uzbekistan. So if we can study in panel setting, probably that will give us better idea to extract policy recommendations so as to understand what Nepal can do better in terms of utilizing remittance for better for societal betterment. And another is, it could be that a financially developed system utilize remittance more efficiently compared to a less developed one. Using the interaction term in panel setting between remittance and financial development might give another avenue on the topic. So that's why I'm saying in case of panel, if we have that interaction, then it will give us an idea whether financial development is itself a channel or the final outcome. And other two recommendation is, remittance literature argues that remittance inflow will propel non-tradable sectors like construction, housing, retail. And although we have not quantified the impact of remittance on non-tradable sector, but we can see that there is some sort of impact on housing sector. Probably it will be better to study that dynamics of remittance as well, so that we can contribute new thing on the remittance literature. So far, what you have done is impressive, but I went over a couple of literature. Probably that may not be enough to give some sort of contribution in the literature. And the last thing is, there is a literature in remittance which says that if a household receives remittance regularly, then they will decide saving and consumption activity accordingly. While if a household receives remittance less frequently, then their behavior is different. So probably this type of uncertainty in frequency of remittance might have also significant implication for macroeconomic variables like economic growth and how financial institutions evolve for the effective utilization of capital inflow. So probably these are the things probably that you want to include in your research so that you can contribute significantly in the literature. So these are my feedback as of now.
Thank you very much, Dr. Koirala. Mr. Manbar, Khadka, would you want to respond, or shall we continue with other questions?
Yeah, thank you, Dr. Koirala, for your very valuable inputs and suggestions. So obviously, like remittance leading to dust disease effect. So that's a very peculiar phenomenon in developing countries that receive quite significant share of remittances. So, but that is not an area that we are investigating in this paper, but at least mentioning in the literature review, that would be something of value added. And also, the ideal setting would be analyzing this effect in a panel setting. So as I said earlier, the data constraint was there. But yeah, we will definitely consider, and again, quantifying welfare impacts, that's very well taken, well noted. So we will take into those suggestions into consideration when reviewing this paper. Thank you.
Thank you.
So I think we have a question from Sudemna. Would you want to go ahead, Sudemna?
Sure, Prabin. Can you hear me well?
Yes, we can hear you well.
Yes, thank you. Thank you, Mr. Khadka, for that presentation. I do have a few queries from my end. So first, I think Dr. Koirala has also raised this issue. We didn't hear back on that, whether it was a nominal value that was used or real values that have been used. If it was a real value, what did you use to deflate the variables, and which year was the base year? Second was on the remittances for Nepal before 1990 is quite difficult to actually get by. I mean, I was not sure how did you get hold of the remittance data from 1975. It would be good to know. It would be helpful for us too. Third was on the lags that were used on the ARDL in the model. It would be good to know about how lags were chosen. Then from the chart, if you go to your charts, we see that GFCF is 0 in 2020, which can be. So I think if you have used that data, then there would definitely be some issues on the results on the regression. So if you go and look at the data, the chart that you have shown, then the GFCF collapses and becomes 0 in 2020. So that can be true, right? So you need to, like, if you are using the data, it needs to be corrected. And in terms of the variables used, it's a bit confusing. In some places you have used like remittance as a share of GDP, other variables also as a share of GDP, and when you show in the chart, you show a level variable. So it's going to be quite a different interpretation in terms of what you are using. Quite different on that in terms of the regression results and also the interpretation as well. The other question was on GFCF. It's significant at 10% level, right? So you cannot really totally discard from the results in the long-term model. If you see the ARDL GFCF short-term model, it's positive and significant impact at the 5% level. So you cannot like really say I think the data needs to be corrected first on the GFCF, but even if data is correct, then the results, we cannot really say remittances have had a negative impact based or didn't have an impact on the GFCF based on the results that you have shown. To be carefully interpreted as well. But if remittances is actually not contributing to GFCF, you have a positive impact on growth, right? GDP per capita growth. Then what is it contributing to it? That remains a $1 million question from the results that you have shown. So because investment is the primary channel how the growth effect takes place, right? So if it's not contributing, what is it contributing in terms of the growth? That's what I had, sort of the questions. And in the growth model, I think into the literature, then some of the things that have been actually missed out is like imports, exports, institution aid, foreign aid, which are around 5 to 10% of GDP within this period, right? So I think that's also missing. So you might have omitted variable bias when you are doing the long-term growth model. That's from my side. Thank you. Thank you for the paper in your presentation again.
So I think in growth model, he says that in the I think first, second or third slide, he says that most of the remittance goes towards consumption, but in growth channel, he fails to include that consumption thing. That's why I said we need to include welfare thing in the model. Otherwise, probably growth implication of remittance might not be complete. So I'm adding to Sudhimna. So we must have some role of consumption in this model. I will not say must, we should have.
Okay. Mr. Manbar Khadka, would you want to respond to Sud, or would you want me to take a few more questions and then you can respond? So let's look at a few more questions. Saurabh Srestha, sorry.
Sorry, I will stop sharing. Is that fine?
Sorry, I didn't get you, Manbar.
Sorry.
Okay, let me take a few more questions. Saurabh Srestha, he says point 4 in your presentation, Manbar, indicates remittances are majority spent on consumption, but point 6 says a positive relationship between remittances and deposits. So he's asking, isn't that contradictory, right? Because on the one hand, you're spending, it shows that there's a lot of consumption, whereas then you also say on point 6 that there's more deposits. Any clarification on that?
Thank you for the very interesting and helpful questions that would eventually help us in improving this paper. So at this moment, I don't have much to comment, but we did take real variables in our analysis, and the base year was 2000-2001. And for the data points that Sudhimna raised, for some data points that is not publicly available in the domain, we used our personal channel to get access of those data from Nepal Rashtra Bank. But again, the welfare effects that needs to be taken into account and the remittance growth channel. So that's well noted. So yeah, these suggestions are noted and taken. So we'll look into those questions.
Yeah, absolutely. And I'm sure you are aware, Manbar, we have a recording, so you can always go back to the recording. Another question that we have, I think Sud's already asked this question, so these questions. So another Srijal is asking, are the variables like GFCF and remittance amount in real or nominal terms? I think you've answered that, right? Sud is asking another question. If the data used in the chart is used, then the results from the investment can't be relied upon. Just a comment. Dr. Bora asks, are the variables in log form? Would you want to respond to a few of these?
So yeah, the variables are in log form, and for the saving deposit rate, so that's not in the log form, but most of the data are in the log form. Yeah, except for the rate, like the secondary school enrollment. So that's not in the log form. Yeah.
Right. So I have one comment or suggestion, because I think we've gone through the questions, Mr. Manbar Khadka, because you've got such a valuable data set, which is a panel data time series. So my suggestion is probably you could do another paper out of this, but looking at the same topic, but using interrupted time series, right? For example, we've got the Maoist, war, which began in 1996, but, it really peaked, I guess, in 2001. So that can be an interruption. The other is, what about the 2006 peace process, right? And also the elections. And finally, the COVID pandemic. And I'm saying this is because I think you can really, have a cool paper, looking at all these different shocks using interrupted time series analysis, but also comparing these different types of shocks. So within a given context, right, there's so much variation, heterogeneity in terms of these shocks. So I guess you could really, optimize, the data set. So think about that, Mr. Khadka, if possible, thinking about the same idea, but using a different methodology, which is interrupted time series, to look at different shocks, compare them, and come out with a real good paper. That's one suggestion that I have.
So yeah, thank you, Dr. Prabin Khadka, for your very helpful suggestions. Yes, we also looked into the structural breaks, that were tested using dummy, but we found insignificant. I mean, particularly, we have this Maoist insurgency, that lasted for a decade from 1996 until 2006. There is this major earthquake. So the structural breaks were tested, but we found insignificant. But just breaking the overall, looking at individual analysis, as you mentioned, that could be done out of this paper. Thank you.
Yeah, and you raise an interesting point, because even if you get null results, right, that's still some major findings, because this is remittance. So maybe some endogenous, I guess, shocks, such as the ones you mentioned, conflict, earthquake, really don't matter, because the demand is still there, right? Let's say, everyone goes to the Middle East. But on the other hand, if the demand isn't there, which, the COVID pandemic, is a prime example, right? Maybe those exogenous shocks matter, right? So a paper with null findings could yet be extremely, I think, useful and important.
Yes, yeah, thank you. So yeah.
Ladies and gentlemen, anyone else? Questions, comments, or any suggestions? Or feel free to reach out to Dr. Manbar, Mr. Manbar Khadka, if you've got any questions or any ideas. And also Dr. Koirala, I think I didn't mention, but he's also looking at networking opportunities, because he'd want to, I'm sure, do further research in Nepal. So feel free to reach out to him. Any more questions? I'll just wait for a few more seconds. Okay, since we don't have any more questions, let me take this opportunity once more to thank Mr. Manbar Khadka, who is an economist here with the ADB resident mission office here in Nepal, and also Dr. Koirala for being giving wonderful suggestions. Thank you, ladies and gentlemen, also to you all for participating in our series number 19, and we look forward to having you all back next month. So thank you and stay safe. Bye-bye.